News is breaking. Steve, can you fix it for us? Steve Leisman has some comments from Federal Reserve Governor Christopher Waller. Steve, what is it?
It depends on what you think is broken, Joe, but I can tell you that Fed Governor Chris Waller is on the fence about a March hike or a pause. He says data showing an improving labor market, but that may tilt his view toward a pause, but there could be an equal argument for cutting if job weakness continues. Big question about whether January was signal or noise, that stronger jobs report. On tariffs, he says the Supreme Court ruling on tariffs, quote, may have a positive impact on spending and investment, but it's unclear how large. He says there's considerable uncertainty to what extent tariffs will continue and how businesses react. He's going to look through tariff effects on inflation as he has done if the tariffs go up or they go down. The SCOTUS ruling, he says, is unlikely to have a significant impact on policy. Getting back to this January report, he has concerns that the January report may contain more noise than signal. He points out that job growth was concentrated in a few sectors, and you get a typical downward revision to January, also along with the idea that there was almost no job growth in 2025. 1 month of good news, he says, is not a trend. And he goes on to say that a strong February jobs report would support the pause, but it could be appropriate to cut if February jobs are weak. And basically, it's a 50-50 probability. Point out, Joe, Waller dissented in January along with Governor Myron. And I'm looking here at the March probabilities, Joe, and they really haven't changed since this news broke. Still at just a 1.2 percentage point probability of a rate cut in the futures market.
Yeah, I mean, really what he said was it all depends. Again, 50-50, depending on what happens. Steve, how much did the government shutdown affect GDP? Did Waller talk about that? Where do we think GDP is running in a, He didn't, but
the data that we got, I think it was Friday, yeah. God, it seems so long ago now.
I know.
Showed a 1 percentage point, 1.15 percentage point decline from the government or contribution, a negative 1.15 percentage point.
That's still below
detraction.
So that'd be 2.5, which is below what the Bulls were hoping, right?
Yeah, it was, but it's, come on. I mean, $30 trillion economy, you're within a half a point. It was a good number without the government detraction. What I'm seeing, Joe, when I read the forecasts over the weekend, was they're putting it back into this quarter. So you're going to get a 1 percentage point lift, which is why Goldman and others are up around 3% for this quarter.
Did you hear Natasha? She came up with that word to describe what tariffs call. They're terrifying. And I go, how did Leisman not come up with that? That since April, you have been terrified. Terrified. You've been terrified, right?
Yeah, it's a good word. Joe, you know what I hate? What I hate is this. These tariffs cause huge spikes in imports, and then imports go away because people are trying to front run the tariffs. And so it messes with the data in a terrible way. You had like a 5 percentage point detraction from growth from trade in one quarter and then a 5% addition. So we have no idea what's really going on in the economy because trade is going like this. Now we can get rid of that and look at the economy without the trade. But I would love for it to go away so we can have a clean read on the economy.
No, I hear you. I have a friend who has an import type operation that is no fan of tariffs. Believe me, I hear about it. I hear about it a lot, and it is true. If you're a small importer of things, it makes a difference. It makes a huge difference. Thanks, Steve. Squawk Box.
Different for big business and small business.
Right.